Hey, what's up, everybody? Wednesday, October 19th. So the market had a little bit of a pullback today. I think the tax train that I was talking about, it looks like it's over. It was a one-day thing. It wasn't a big thing. Like October 15th, this year it was October 17th. Those are not big drains, so it's done. It was a 30 billion drain. And you know, I think things potentially look positive into mid-December, but I gotta say I need a couple more days of data. It's just a little bit too early right now for me to make a definitive call on that. I want to see how these daily flows, these daily fiscal flows develop. I mean, they were looking pretty good. Today I got a little, some of the numbers looked a little bit questionable. So it's a little bit too early, but I think if I had to make a guess right now, if you put a gun to my head, I'm saying that they will evolve or develop in a positive fashion, and I think that could trigger a pretty big rally, but I still need a couple more days. So lately, you've probably been hearing a lot about like China's selling US Treasuries. And that's true. I mean, they've reduced their holdings like in the past year by almost like 200 billion. Japan has reduced their holdings too. But overall, the trend of foreign holders of US Treasury securities, that's going up. Here's a chart of the overall trend. And by the way, you can get this data from the Treasury, and I will put a link in the description below. You can get this data, and if you want, you could put it into an Excel spreadsheet, and you can make a chart, or you can make a chart for all the different countries if that makes you happy. I just did it for the overall holdings. It's about 7.5 trillion held by foreign countries, all right? And that's on a rising trend, as you can see right now. I mean, one of the things you have to realize is that in 2022, this year, US issued a lot less debt. I mean, it was like 2 trillion less because taxes, it didn't need to. I mean, taxes were record-setting taxes. I've been talking about that for a long time, about these tax drains, and not just, these quarterly tax drains. It's almost like every day we barely have a positive flow. I mean, we do have a positive flow, thankfully. Remember the swimming pool? We do have a positive flow, but I mean, it's really reduced from what we had last year. Last year we were still getting a lot of that pandemic stimulus and stuff like that. But I think we might be at an inflection point where the rate hikes are starting to kick in slowly in the form of greater interest income transfers from the government into the economy. I still, in certain, there's certain observable, data that show that to be true. But, I want to see it in more of a broader way. I mean, where it really starts to impact the daily flows. And I think that's starting to happen. But again, I need to see how that develops. You always have time, folks. Like there's time to do stuff. Like people think like you got to do something immediately. I mean that's not true. I mean, there's plenty of time to kind of collect the information and make an assessment of what's going on. Anyway, getting back to these treasury sales. Yeah, it's true that China and Japan have reduced their holdings, but look who has picked up some of the slack. I mean, you got it from the UK. Now is the third largest holder of US Treasuries, and number 4 is the Cayman Islands. That's where all the, the money is stashed from people who are avoiding paying taxes. Hang on. So we know that the money goes to the Cayman Islands, right? And then what do? The people who have their money parked or stashed in the Cayman Islands, hidden, I should say, in the Cayman Islands, they buy US Treasuries. Cayman Islands is the 4th largest holder of US Treasuries. But you can go down the list on that thing. UK is probably, I think that's probably OPEC. You got a lot of these OPEC billionaires. They have accounts in banks in the UK, and they hold treasuries. Now, I said it was in 2021, I think. I got to go back and look at the data that at one time Ireland was the 3rd largest, and it was Apple Incorporated set up their corporate. I don't know. Have to take a look at that chart again to see where Ireland is. But so the big thing is, like, the Treasury was not issuing as much debt in 2022 compared to 2021. So that's another reason why you see the decline. It's true that some of these countries like China and Japan, they maybe have diversified out of the net dollar holdings that they have. And by the way, those are, what is the US Treasury debt? Those are dollars just held in the form of like a savings account. The Treasury security is like a savings account of the US government, It's not debt per se. I mean, it's dollars that those countries have, probably because we know in the case of China and Japan, they are net exporters to the United States, so they sell us stuff. Japan sells us cars, Toyotas, Hondas, Nissans, and China sells us all kinds of stuff, and they earn dollars, okay? And the dollars, they hold the dollars in the form of U.S. government securities because that gives them an interest rate. That gives them interest income. The dollars aren't physically over there, like they're not over in Japan. I mean, dollars can only, dollars on deposit can only reside on the books of the Federal Reserve. Like, it stays here. When people talk about, capital flows, they don't flow anywhere. They stay there. These countries, through their central banks, the Central Bank of China and the Central Bank of Japan, the Bank of Japan, have accounts at the Federal Reserve. And, if they hold, like in the case of Japan, whatever, $1 trillion in treasuries, there's $1 trillion. The Federal Reserve marks their account, $1 trillion. And then when they buy treasuries, the Federal Reserve will debit the reserve account of, like, the Bank of Japan, and it will credit the securities account, because the Federal Reserve has two separate sets of accounts, just like a regular commercial bank, right? The Fed is a bank. The Federal Reserve has, like, your bank could offer you a checking account and it could offer you a savings account, right? Same thing at the Fed. The checking account is the reserve account. That's where cash dollars on deposit sit. And the savings account is they call it the securities account. That's where U.S. government securities sit, all right? They don't flow out anywhere. They don't go anywhere. And the same thing in reverse. Like, if if one of our companies, the United States corporations, has an account or in has money in Swiss francs, let's say, the Swiss francs reside, those Swiss franc deposits reside at the Swiss National Bank. All right? It's still an asset to the U.S. corporation, but it's not like the money moves back and forth. All right? These are just like bookkeeping entries. Anyway, so yeah, I mean, the trend of foreign holdings of U.S. government securities is going up. as you could see from the chart that I put up before. It's an uptrend. It'll continue to be an uptrend as long, I tell you this, it will continue to be an uptrend as long as the U.S. runs a trade deficit, which means that there is an outflow. And again, it's after that whole thing I just described, you can't think of an outflow as the money actually physically going out somewhere. But there's an outflow of dollars into the rest of the world. You know, we pay in dollars usually. Now that'll shrink. That trend will reverse if one day, you know, we see a significant and sustained decline in the U.S. current account deficit. All right? And that might happen. I mean, we're already seeing, by the way, part of this too has to do with petroleum sales, exports. Petroleum exports from the United States to particularly, you know, like Europe and the rest of the world, since the Russian-Ukraine war, I mean, petroleum exports have gone way, way up. That has shrunk the U.S. trade deficit. And if that continues, you know, we'll continue to see a narrowing. And at some point, you know, I don't think petroleum exports are going to be enough to turn the U.S. current account deficit into a surplus, but it could definitely shrink it, you know, in a fairly substantial way. We'll have to see, because these exports continue to go up. They're growing every day. As a matter of fact, we got the data from this week's EIA Weekly Petroleum Status Report. You know, we're doing over 4 million barrels a day of crude. We're doing 5.5 million barrels a day of refined product. I mean, a couple of years ago, it was basically zero. Okay? Exports were banned. The ban was lifted under Obama. Trump really pushed the whole export paradigm. He was really into that. Like, we got to make some money for the United States. That's my terrible Trump impression. And it continues under Biden. I mean, it's something that I've been mentioning from time to time because it's something that Biden can do by executive order very quickly if he wants to take some of the pressure off of rising oil prices here in the United States, rising gasoline prices. I mean, we're exporting a ton of it. So we're taking our bounty, our surplus, and sending it out to the rest of the world. And that's creating these tight conditions with respect to inventories and stockpiles of fuel and crude, etc. But he's not doing that. So anyway, that is the story with China and Japan. It's go to that if you want to check it out. Go to that link, and you know they give you all the countries that are holding U.S. debt. And yeah, we got the UK number 3 and Cayman Islands coming in at number 4. That's it for today, folks. Bye.